Welcome to part 4 of this 4-part video series I've put together to help people manage their finances better. When it comes to wealth creation, it is extremely important that you start having a firm grip on your finances so that you're savvy enough with your money to start making the right decisions that will enable you to create wealth. In part 1, I chatted to you guys about unsecured debt and short-term debt and how much this eats away at your ability to create wealth. In part 2, we chatted about vehicle finance and the kind of things you need to be looking out for should you be looking to upgrade your car or buy a new ride. And in part 3, I chatted to you guys about property finance and the different kinds of property finances out there and what you need to be looking out for in terms of insights that will enable you to make the right property investment decision. In part 4, I'll be chatting to you guys about business finance. Now, businesses are something close to my heart, and I want to see a lot of businesses thrive, and I know a lot of guys out there are looking for the funds to take their businesses to the next level. So I hope in this video, I give you the insights in terms of what you should be looking at when creating the kind of profiles required by banks to get the finances required for your business. Be sure to subscribe to the channel. Be sure to like, to drop comments. I'd love to get in touch and interact with you. But check out this video and enjoy and let me know what you think. One love. So you have a brilliant idea, you have an amazing idea, and you need funding to get started. The challenge is most startups in South Africa and in around the world fail during the early start. So without a proven track record, it's going to be very, very difficult for you to get the funding required to really take your business off. So what does this mean? This means that you need to get started. You need to get as much funds as you can get in your own personal capacity and invest this into your business and then build a proven track record, because banks do not fund startups. In my experience, I've seen banks do not fund startups. What they do fund is businesses, not necessarily ideas, but businesses. So look at building a business model with a little bit of a proven track record that you can use as a stepping stone to get funding to get to the next level. So get some skin in the game, refine your business, look at the nuances required and what you need to change and what you need to optimize, and then go to the bank with that in mind to try and help you open up your market, get more exposure, and really start turning things up from a business perspective. So in this video, I'm not going to waste your time in chatting about getting funding to get started. What I will do is focus on the funding you can get to take already established ventures to the next level. And there's a few things that you're going to need to have in place when you approach the bank. The first thing is a set of financial records. Now, this includes financial statements, management accounts, a debtor's book, and a copy of all your invoices. Now, what's extremely important is for you to have a very objective view on your business and not base it on how you feel about its future prospects. The story is in the numbers. Remember, men lie, women lie, but the numbers don't. So interrogate the numbers, and if you're confident enough in the numbers, only then approach the bank. Not based on future projections, but based on historically a proven track record. Generally speaking, a set of 3-year audited financial statements is generally a good place to start when approaching finances looking for funding. A very important thing is for you to be very clear on what finance you require and why you need this finance. Is it for commercial property? Is it for working capital? Is it to finance new equipment and machinery? Understanding what it is exactly you're looking for in terms of business finance is extremely important so that you can start researching the various finance structures available for the finance option you are looking for. For example, let's say you're looking for commercial property finance. In other words, you're looking for a loan to purchase a premise that you will use to run your business in. Now, when you do your homework, you will realize that you will not get 100% finance for a commercial property, and you will need to build up a 30 to 40% deposit before you can approach a bank for finance. Secondly, commercial properties are financed for about a maximum of 10 years. Other institutions might finance it for 5 years with a 50% residual that you can refinance for a further 5 years when the term is ended. All this allows you to work out based on how the business has performed historically if you can comfortably afford the monthly repayments. When financiers provide you with a loan, they are taking a risk. The more security you can provide financiers, the more the likelihood that they will approve the loan with more flexible terms and a competitive interest rate. So ask yourself, what assets do you have in your businesses or in your personal capacity that the business can use as security to lend against? Maybe you have a home with sufficient amount of equity that the bank can gear up on. Maybe you have a strong debtors book that will generate strong streams of revenue. Or maybe there are people in your networks who are financially strong and are willing to stand as financial surety for whatever business finance you are looking for. Again, I have to reiterate that when it comes to business finance, what's extremely important is the numbers. So as the business owner, make sure that you analyze the business numbers very well so that you understand them in detail. Business financiers will look for revenue growth. So make sure that you have the right price and volume mix to ensure that your turnover is increasing over time. Profitability is also extremely important. So make sure you have a firm grip on the cost of sales, the operating costs, and the finance costs to ensure that your business has healthy margins. Your business's balance sheet should have a positive tangible net asset value. If you have a highly geared or a lot of exposure in your business already, this will raise risk concerns to the finances. A positive cash flow is always a good sign of a stable business. And the more retained income you have reinvested into the growth of the business, the better. As the owner or managing director of the business, your own drawings and how you manage your personal affairs is also extremely important, as the finances will need to back both the jockey as much as the horse. At the end of the day, the finance that you get given and the terms, the fees, the interest is all dependent on your overall risk profile. And I hope I've given you more insight in terms of what banks look at when assessing the risk profile of businesses looking for finance. I hope this has been extremely helpful in giving you some insights in terms of business finance and particularly what finances look for when assessing risk profiles and the kind of things you need to be thinking about when you're approaching finances for business funding. And this has been part 4 of a 4-part series that I've put together to help people manage their finances. And I fundamentally believe that you cannot build wealth if you don't have a firm grip on your finances. So if you haven't checked out the first 3 parts of this 4-part series, please make sure you check them out. I promise you there's a lot of value that can be added. There's a lot of financial literacy that you can adopt in your life that will enable you to become much more savvy in making the right wealth creation decisions. It's been awesome hanging out with you guys. Please make sure that you subscribe to the channel for more awesome content. I want to see you building wealth. I want to see you doing amazing things. So please make sure that you check out all the videos. Promise you, there's more awesome things coming up. Stay tuned. It's gonna be a movie. One love.